Hey folks, my guest today is Michelle Bacharach. She's the CEO and co-founder of Find Mine, an award-winning content engine that uses machine learning to scale content curation for the world's top retailers. Michelle, you ready to take us to the top?
Yeah, thanks for
Okay.
having me.
All right, content creation is a tough space. Walk me through this. How'd you get into the industry? Is it fashion and content for retailers exclusively?
Yeah, retailers and brands currently across fashion, beauty, and home. Those are our first three categories. And I started the company because I felt like there was a big friction point for the consumer where, consumers aren't experts in the product categories we're buying, whereas the companies we're buying from are experts. And so there's a gap between how much of that expertise is actually reaching the consumer. And I
Mhm.
found that that gap was really happening because merchants and marketers within these brands are, they're trying to communicate their expertise, but they're stuck with kind of manual means of doing that. So,
Yeah.
making an email campaign or a Instagram post or, curating a landing page on the website. So, what our approach is to use machine learning to kind of predict what that person is going to do within the organization rather than predict what a customer is likely to do. Because if we're predicting what the customer is likely to do, they're going to stay at that same level of expertise they've always had. Whereas if we predict what the brand expert is going to suggest, we're going to get that aspirational kind of brand imbued expertise
So
to
what are
share
these
with
what are
them.
these brands paying you for this technology on average per month,
So our average contract size is about 160,000
per
um,
year?
per year. Yeah.
Okay.
And it's driven by volume. So the more places they use our engine to put content in front of customers. So let's say they start
Places
with
like location, like physical locations or web properties.
properties. So channels like email or social media, e-commerce, the more, eyeballs basically that we have on our content, the more they pay. But there's also, a unit economic benefits. There's economies of scale built into that pricing model.
Yep, yep, yep. And what's the cheapest plan people can get started with?
It's about 20,000 a year.
And how many unique hits is a website getting if they pay you 20 grand a year?
It depends. So it depends a little bit on how many products they have. Depends on like what their average order value is and how much revenue we think we can increase for them. But it would range from like a few million to maybe 20 or so million.
Okay, interesting views across properties. Okay, so you're upselling against multiple triggers, and then don't obviously name the company, but what's your largest customer paying you per year?
Our largest contract is probably about three quarters of a million.
Okay, got it. So pretty large. What's the backstory here? When did you guys launch?
Yeah, it's a great question. So I've been trying to kind of solve the consumer side of this problem since 2010. And it was always kind of on my list of, I hadn't started a company. I was getting my MBA. I was working full time in other things. But, I had this list of 50 startup ideas on my phone, and this kind of friction for the consumer I kept coming back to. And was trying to solve it from like a consumer standpoint since like 2010, officially like incorporated a holding company to workshop startup ideas of which this was one in 2014. Kind of hit on like the B2B angle in 2016. We launched with our first B2B customer in 2016. And then, since the pandemic, obviously retail has changed dramatically. And so our business and the product offerings and the way we do it really changed in 2020. But I would use 2016 if you have to kind of pick one start date.
And what was the revenue in the first year? It's always a fun question.
I think our first year revenue was like $3,000 for the year.
How did that make you
And
guys feel in December that year? Do you remember?
I mean, it was great. I think our customer got like a 3000x ROI. And we were like, okay, we need to change our pricing a little bit. But we were thrilled. That was huge.
Yep. And then did COVID generally increase your revenue or decrease your revenue?
I mean, COVID decreased the revenue, but now has increased it. So I think it
Yep.
was like it it was a curse and then a blessing, I like to
Yep.
say.
Yep. No, that's good. Now, how many customers are you working with today?
We're working with about eight
Okay.
different payers. And some of our customers have portfolios of different brands.
hmm
So, we work with Adidas and they own Reebok, and we work with Perry Ellis and they own Cuba Vera and Callaway and Original Penguin. So there's, some portfolios that we work with. So there's definitely more brands. And then we also work with multi-brand retailers who sell hundreds of different brands. So we have
Yep.
probably about 500 brands on our platform.
Well, Michelle, if I'm doing my math correctly, you just passed an important milestone. Can I take 8 customers times the $12,000 ARPU? That's 96 grand a year. You're north of a month. You're north of $1 million run rate at this point.
Sure, yeah, you can do that math.
Was that accurate? Did you guys pass that earlier this year?
We have passed that. Yep,
That's
we're over
exciting.
a million in ARR. Yep,
Congratulations. Now, did you do a bootstrap or did you raise?
we've raised financing. Yeah, we raised about $7 million lifetime to date.
Okay. What was that broken down and like how much did you raise in 2016, if any?
In 2016, what do we do? I think it was like an angel round of $100,000 plus some accelerator money. So we did an accelerator called XRC Labs, and we got 50K from them.
Do you recommend them? Have they been helpful?
Yeah, so we were actually part of their first class ever, and they've like completely. They were a startup themselves. They've completely grown, but they're retail focused specifically. And if a company was trying to sell into that space, I 100% recommend them.
Wow. Okay. Got it. And then you raised more since then. What was the other rounds?
So we did like seed after that. And yeah, so that was the balance of it. But
so you're just in the seed. The seed was a 7 million seed.
Yeah.
Oh, wow. Okay. When was that? Pre-pandemic or post?
Pre. Yeah.
Pre.
All pre-pandemic. Yeah.
Wow. Okay. So what's sort of the next plan? I mean, once you're sort of on the VC flywheel, you have to sort of be raising every 18 months. Otherwise it looks bad to the market. So are you raising now?
Yeah, we're actually, 2020 was not a good time to go out to the market, especially within retail. But now it's a great time to go out to the market because retail has more than rebounded. I would say the whole industry has been pulled forward like 10 to 15 years. And we're just seeing like we're getting tons of inbound from VCs who are like, we're really into e-commerce enablement, or we really want to focus on retail tech. And that never happened before. Yeah. I mean, that never happened before. People were sort of like, retail tech, like that's not that sexy of a market. And now all of a sudden people are really excited about it. So
what's the right amount for you to raise, do you think?
So we're looking to do like an $8 million Series A, kind of right down the middle. We don't want to raise too much. We've seen companies do that and not have great consequences. But we also have really like clear unit economics in terms of like pipeline conversion ratios, how many account executives we need to achieve quotas and stuff like that. So it's pretty capital efficient and can do a lot with a little.
Mm-hmm. How many account executives are there today?
You're looking at her. It's just me.
You. Yep.
Yeah.
So how do you model your first sales hire that's not you? Obviously, they're not going to perform as good as you. You're the founder.
So we actually already went through that pre-COVID. And then because of COVID, we don't have a sales and marketing team since then. That's part of the way we, cut burn and stuff. To keep the lights on during the really challenging time of 2020. But what's really good about that is like we know we've been through the wall on the first sales hire, which is a big challenge, and learned a lot. And so we have kind of our unit economics and like the ramp and the training assets and all that stuff kind of lined up. So I know exactly what that looks like, and I know
how many months to ramp. How many months to ramp is in the plan for a new sales rep?
4.
Okay, and when they are ramped, what do you expect them to hit quota wise?
Million a year is the
million.
quota.
And do you have like traditional full on target earnings, 200 grand, 100 grand base, 100 grand commission?
Yeah, it's 50% base, 50% commission, but commissions are uncapped.
Oh, nice.
Yeah. So they could be like 25, 75 or whatever, sky's the limit there.
And how many total people on the team today?
There's 12 full-time team members today, about 20 something if you include, part-time and consultant.
What about full-time engineers?
Full-time engineers, 4.
4. Okay. Interesting. Nice mix here. So raising now, obviously most folks, well, not obviously, but most Series A folks are selling 10 to 20% of the business these days. Do you think that's probably what you're going to have to sell here?
Yeah, I think so. I mean, I think that's pretty standard. I've seen all the data, but, I think I'm more interested in the partner than in the like specific amount within the bounds of kind of what's normal given up. Because, VCs can make great connections, especially around hiring and customer base and stuff like that. So looking for, some of the softer skills maybe as being more important in this next financing.
Yeah. The only thing that's important in terms of like the check size versus the valuation is dilution effects on yourself, right? And others, right? So like, I mean, it sounds like if you're comfortable doing an $8 million round, selling 10 and 20%, you're comfortable, assuming the right strategic fit, you're comfortable doing like a $45 million post all the way up top. Obviously an 80 million post would be 10%, only 10% dilution. Is that right?
That's right. Yeah.
Yeah. Interesting. Very cool. Okay. So scaling nicely. It's 8 customers here. You already have a playbook because you had a pre-COVID. Now, how many customers do you have pre-COVID?
We had probably about the same. So we lost 3 customers due to bankruptcy, unfortunately, during the pandemic.
Oh, wow.
But we've
Okay.
actually only had the only churn we've ever had are those 3 bankruptcies and 2 companies that got spun off to private equity by their owner. So we've never
Mhm.
actually had any product related churn, which is, I think, pretty incredible that we kept those customers during the pandemic when everything was falling apart for
Mhm.
them.
So what would like when you go out and do this raise, people are going to ask for your growth rate, right? So what would you say your growth rate was over the past 12 months?
Yeah. So since the beginning of 2021, I don't actually know it for the past 12 rolling, but since the beginning of 2021, it's 140%, and we should end the year at 400% year over year.
Got it. And if you're around like 100 grand a month in revenue, what you're saying is what you started the year at like 60 grand a month in revenue, something like that.
On a monthly basis, I'm not sure, but
Okay.
math sounds right from a growth rate
Yeah.
standpoint.
Yeah. 60 grand a month. And then 40% growth takes you up to like, 80, 90 now and 400%. I mean, gosh, that would be what, do you think you can get like to a quarter million a month by the end of the year?
Yeah.
Wow.
Yeah. We
That'd
have
be
line of sight to
impressive.
that. Yeah.
That's great. And is it expanding the number, like the wallet share of the current 8 customers, or adding brand new logos altogether?
Both.
Okay, interesting.
Yeah.
Very cool. Okay, great, interesting story here. And pre-COVID, were you at the same revenue level? So if you compare 2019 to 2021, would it look flat without the COVID dip?
Yeah. If you just looked at those two, it would look flat.
Yeah, yeah.
Doesn't tell
But
the whole
interesting.
story for sure, but
No, gosh, no, definitely not. Very cool. Well, yeah, obviously rooting for you. This is great. Any other products that you want to chat about that I didn't ask about that you think is really important?
yeah, we have one cool product that's it's so we do this content creation mostly for the brands owned and operated properties. So like their website, their ecom, or sorry, their website, their social media, stuff like that. But we have a new offering that we call brand edit syndication that is basically taking that point of view and putting it on the multi-brand retailers site. So that becomes kind of like a flywheel from a growth perspective for us. But the benefit for the brand is they get consistency for their sort of storytelling opportunity on platforms that they don't control without having to do any manual work to keep up that asset,
Hmm.
and then or create that asset in the first place, I should say. And then the multi-brand retailer can monetize that. So you're starting to see a trend in retail where multi-brand retailers, like Walmart has Walmart Connect, Macy's has Macy's Media Network, where they're monetizing their websites with traditional advertising. So we have a new product offering for that, which is going to be huge. And then we have some new features and functionality within our existing software to help with some more of the like back office metrics, things like inventory sell-through rates and gross margin management or optimization for the merchant. So it's not just about the consumer experience anymore. Both of those new offerings were things that we like hunkered down and did during COVID because everything was changing, everything had to change. And I think our value proposition now to brands and retailers is like 10 times stronger than it was before COVID when it was just getting you more revenue, right? That's nice and it was working, but now we have these additional levers to pull as well.
Well, we hope all those customers get addicted to those new lines and you come on in a year and tell us about the success again. But for now, Michelle, let's wrap up with the famous five. Number one, favorite book.
Ooh. Um, Quiet. I think the subtitle is the how to succeed in a world that won't stop talking, or the power of introverts in the world that won't stop talking.
Number two, is there a CEO you're following or studying?
Um, I like my peer group. I think that I learn more from them than I learned from, Bezos or some of the big ones that don't feel as relatable anymore. So I have a CEO peer group of like seed and Series A and Series B companies that I connect with. There's a number
Number
of them.
number three, what's your favorite online tool for building? Find mine.
Oh, great question. I'm a big fan of Carta. They're probably my favorite for
Saves you a
that.
lot of time. Yeah. Number four, how many hours of sleep do you get every night?
9.
Okay. And situation, married, single, kids?
Married with one child. He's 18 months.
Oh, wow. Congratulations. That's so exciting. Can I ask how old you are?
I'm 30. I'll be 36 on Monday.
Oh, happy early birthday. That's great.
Thank you.
Take us home here. Last question. Something you wish you knew when you were 20.
Nobody has it figured out, so my guess is as good as theirs.
Guys, there you have it. Findmine.com, retail brand, launched in 2016. Working now with 8 brands. They do about $100,000 a month in revenue. That's up significantly, about 40% from the beginning of the year as they come out of COVID much stronger. They raised $7 million today. Looking at doing a traditional Series A now. Call it, raising $8 million. We'll see what happens. But again, check out findmine.com and check out Michelle. Again, predictive intelligence for merchants and markets to automate their catalog. Michelle, thanks for taking us to the top.
Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.